Traders, it's Kyle from K Capital here breaking down one of our key trading setups, the pop, drop, and go. This is one of our short-term long setups that we swing for typically days to a week or two holding period. The true definition of this is a stock that breaks out on above average volume. We miss that initial entry. So what we do is we wait for a pullback, typically to the midpoint of that candle. So ideally you want to look for trades or stocks that are in an uptrend if you want to go long. And really they trade in a significant breakout to where you have a really long candle. So before we get to an example of this type of setup, the one thing I wanted to do is definitely break down how we go about finding these types of trades. So there's a lot of free resources out there in terms of scans. What we use day in and day out is either bar chart or our specific scanners on Investimonials or our specific scans on interactive brokers. So the one thing that you can do with bar chart is just set up a free account. It's really just as simple as that. And they have all these trades and scans in here that you can go through and you can basically filter by exactly what you would need. And one of the things that we really filter on is above average volume advances. So really when you want to look for a swing trade, you want a stock that's definitely trading above average volume on that breakout. And what that indicates is really just there's a lot of momentum in terms of who's willing to step into the position to buy. So one of the things, again, we look at is you go to stocks, U.S. exchanges, volume percent advances. And we set this up really to be kind of really simple in terms of it shows us the 1 month, 6 month, and 3 month averages for these trades. And what we'll do is we'll take these stocks, and right now you have a perfect universe of stocks that as of today, the 24th of September, have traded above their average volume. So is this our final watch list? No, it's not. But again, for this specific setup, this is something to where it gives us an initial outlay of what we can really trade and look for tomorrow. So right off the bat, what I would see is a few of these positions that really were in that key zone of 3 to 4x the average multiple volume. So if we took CVSL or KAPN, what we see is the average volume here is in the 500 to 700K range or 100 to 150K range for CVSL. So right away we know that this is trading a huge multiple of volume today. So we would go through this list and we would identify 10 top stocks that we would then take and then break down into our scan. So for example, if we wanted to take this stock CVSL, really we would just plug it in and look for the specific match to our setup. Now that setup again is a pop, drop, and then a pullback. So as we see here, we see a stock that had a really nice baseline. The MAs or the exponential moving averages crossed down late July, and really it's traded nicely ever since. Now the pop in volume here has been a significant drop today of roughly 9%. So it's not something that we would really look forward to go long in. Potentially we could go short. But then we would really run this through each one of our stocks from our watch list and really take this to match a certain pattern. And that pattern, like I mentioned, is that pop, drop, and go. So if we went down again, let's just look at a few more just as an example. So something that definitely pops out to me here is ECR. So Eclipse Resources. This is probably going to be an energy play. All right, so a significant downtrend here. This would be a potential to short. If anything, we would look for the break here in terms of the support level. It broke. This might be a play to where we could go short for a quick 5-10%. But again, that doesn't really match our specific pattern that we're looking for here. So I'll run one more, and then I know a few off the top of my head that could be good candidates to go through. So another one that popped up in our scan is CANF. All right, so now this is a nice uptrend, but it's too volatile for swing trading. And what I mean by that is typical when you see a bio or a pharma stock shoot up roughly 700% in 2 days. That's one that is an ideal short. So obviously you would have saw this pump here. It pumped the next day all the way up to 8. We probably would have went short and somewhere along this candle just for that collapse to fill this gap here. Again, but this isn't something that we are looking for in this specific scan. So I'll go to one that I know for sure fits this because we're in it. So CRWN is Crown. Again, we ran our scans a few times over the last week and we saw a pump in volume here and a spike in volume here. So this is something that we went long in the 4-8 range. We're currently up, I think, 10% in this as of today's close. So it's been a great trade for us so far, especially in this market. But if you look, let's take a look at specifically what happened here. You had this big spike, and really at the time we missed that. We didn't really catch this in our scans beforehand. What happened was it traded down to that midpoint, and how you calculate the midpoint here is just take the high, so 537, and the low, 463. Take that difference and divide it by 2, and take that number off of the top, and that's really the midpoint of the candle. And that typically served as great support here. And if you look, it bounced off of that point here and here the 2 days following that breakout. Rallied up, so you could have day traded that for a nice little profit. But I think we're in here for a nice, return overall, because obviously it's going to trade now across these exponential moving averages, and it should see higher highs soon. And it has been trending with that. And if you look back, the great saying in swing trading is the trend is always your friend, and frankly it is. And if you rode this trend off of the 15 or 20 and 50 EMAs and then the 13 EMA, you could have definitely made a nice profit here if you would have got in at the beginning of the trend. This point here is another type of alert, which I'll get to tomorrow, but for the time being, again, we're just focusing on the pop, drop, and go play. So right now, again, we're long in this area off of the midpoint candle here. We're going to just trade this until if it pulls back and hits our stop is when we'll close, but we're going to potentially add as this trend continues up, and hopefully we hit 6, which is our initial target. But again, just to recap, what you really want to look for in these specific setups is really just a above average volume breakout. You can get those types of scans, multiple sources on the internet, but bar chart's definitely a good one. Open an account there and then set your scans up so that you have the average volume for the last 6 months displayed. And really, you can scan through that every night to fit the specific pattern and just take it into your charting tool, whatever that may be, to see if it fits the pattern that we ideally would look for. And to recap that pattern, it's just an uptrend over the last 6 to 12 months, a significant spike in terms of the actual breakout candle. And then if you miss that, most people do, you want to wait for a pullback. You never want to buy at the very top, especially in swing trading. Only day trading really does that work because you're in and out in less than 24 hours. So hopefully this helps. Again, this is one of many trades. I'll break out this specific video and I'll add it to our specific educational center. You can expect videos for all of these plays in the next couple days to week. That's my intent, to kind of display what we do and how we find the positions we find. So if you have any questions, please shoot us an email. And if not, I'll talk to you guys soon.